Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 17th of December 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's kick off as ever with a look at the overnight changes and price moves to be aware of. But as it's a Monday, of course, we'll look at things from a weekly perspective. And let's start with our old favourites, euro, dollar and cable. For the euro, a week spent on the back foot overall, down by about 0.61% against the US currency. It was sterling, though, that bore the brunt of the falls in Europe, down by 1.12% against the US dollar, and back below 126, of course, as the Brexit uncertainty continues, and it's sentiment, obviously, that's going to be driving sterling exchange rates until we find out which way the cookie's going to crumble, as it were, over the Brexit debate. In terms of Australasian currencies, both the Australian dollar and the New Zealand dollar were weaker on the course of the week, but the New Zealand dollar bore the brunt of the falls, and that fell by just over 1% against the US dollar as a result. The dollar also saw gains against the Canadian dollar, where it was up by 0.47%, and against the Indian rupee, where the dollar clawed back 1.5% against the Indian currency. Dollar index, for its part, finishing the week higher, trading this morning at 97.45, up by around 0.96% over the last 7 days. The cryptocurrencies had a torrid week as well. Bitcoin down by around 5%, Ether down by a further 4.65% over the previous 7 days. Okay then, what's on the calendar? Events that may move the markets today. A pretty busy calendar. We've already had house price data out of the UK according to Rightmove for the month of December. Month-on-month numbers were lower, year-on-year still showing modest growth. To come at 9 AM GMT, we will have trade balance data out of Italy for the month of October, and that'll be followed at 10 AM by similar data from across the Eurozone. And at the same time, we shall get a window on inflation in the Eurozone with the CPI index data, both core and non-core, for the month of November. We'll also get a chance to look at the state and health of the German economy as far as the Bundesbank is concerned, with the publication of their monthly report. And then we'll cross the Atlantic at 13:30 for the first of this afternoon's US data in the shape of the New York Empire State Manufacturing Index, and this release is for the month of December. At 1500 we'll have NAHB Housing Market Index data for December, a look at house price performance in the States over the current month. We'll have 3 and 6 month T-bill auctions out of the States at 16:30 GMT, and then at 2100 we'll have some net long-term TIC flows and total TIC flows data for the month of October. This is a look at capital flows into US securities over the month of October, so a chance to have a look at how overseas capital and overseas investors were playing the US markets during the course of October. Okay, breaking news and comment then that's caught my eye overnight and over the weekend. And first of all, in a rather surprising move, White House advisor Stephen Miller has said that a US government shutdown is possible if the Democrats don't vote for Trump's $5 billion border wall with Mexico. So we may find ourselves at a bit of a Mexican standoff, if I can make that rather dreadful pun. The Democrats don't feel inclined to vote for Mr. Trump's rule on all sorts of reasons, and Mr. Trump is threatening to turn off the tap of money to the US government and actually close down essential services. So a very odd set of circumstances there. Meanwhile, Mexico's new president AMLO has presented a fiscally prudent budget with a forecast 1% surplus for 2019. There was money for welfare and infrastructure spending, but there were no new taxes, and Goldman Sachs analysts described the budget as realistic and not too far from the market consensus. Meanwhile, in New Zealand, services have grown at a slower rate during November. PMI data reveals continuing a downtrend that began in March 2018, and that's a bit of a concern for the New Zealand economy, and some of that may go towards explaining why the Kiwi has been so weak of late. Okay, food for thought and something to take away with you into the trading day and beyond. And why not think about this? Migration from the EU to the UK has declined since the Brexit referendum, with more non-EU nationals coming into the UK since then. The question I'd like to ask is this: will the UK have the right skills mix for an increasingly tight job market going forward if those trends continue? The first chart here on the right hand side is from the FT, showing that fall off in EU migration into the UK and a pickup in non-EU migration here. The second chart shows the fall in unemployment in the UK and the rise of job vacancies, both of which have been gathering pace across 2018. We can't say too much about the skills mix of the labour force from this chart, but it's certainly something to think about, and maybe it's a trend post-Brexit that hasn't perhaps been given enough consideration. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be risky business. If you're in any doubts about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and do take the time, please, to read this risk warning thoroughly. Thank you for your time.